Bitcoin isn't just a digital gold anymore. It's becoming the foundation for a new financial system, one that you control. While politicians inflate away your savings, the people's reserve is rising. In this video, I'll reveal the shocking truth CJ Konstantinos just dropped about Bitcoin's next chapter. The first of which is to do with the notion as to why people ought to invest in Bitcoin. Why is it such a pristine collateral and as such the leading store of value asset that we should actually buy into in order to store our wealth and help grow our capital as well as preserving it. So he actually gave an interesting journey as to how he actually got into Bitcoin, because himself, as many other people out there, as all of us indeed, we all come from traditional finance, trade fi basically. And he actually got his teeth into the bones learning through mining. That's how he actually started off the journey on learning a bit more about the Bitcoin protocol itself, the network, not to actually expecting to get some money out of it, but using it more as a deep dive learning experience in order to truly understand the economics of scarcity, the 21 million coins that will ever be in circulation in the Bitcoin network, and so on. So that was really one of the key points there, and why going through that kind of educational journey, getting his hands dirty into the Bitcoin mining and the protocol, has led him that Bitcoin is the only asset that truly increases its own cost of production. Now this makes sense because as more miners come into the network, they're effectively competing with one another under a set finite supply of the Bitcoin asset, the Bitcoins themselves. There's only be 21 million. So as there are more mining participants in the network, with each having its own set of energy costs and infrastructure, you're effectively increasing the cost of production, i.e. increasing the cost of mining new Bitcoins in the network. And by doing that, you're going to be increasing what we call the difficulty adjustment, which is in a sense like a built-in mechanism for economic resilience. Because as the cost of production increases in order to mine new Bitcoins, you're going to be ramping up quite substantially over time the actual price appreciation of Bitcoin itself. It doesn't just look at it now as an investment, but more as an engineered savings technology, i.e. the store of value. The next point is around the notion of what is the people reserve. Now, given his experience and having gone through this educational journey on the Bitcoin protocol, he's trying to now create kind of a market maker for we the people, because it's true that one of the other tremendous revelations about Bitcoin, it's been driven bottom up. So it's like it was built by the people for the people type asset, which is very different if you compare with other traditional finance assets where it's mostly driven top down from the elites by those corporations and institutions in order to make money, rather than thinking about the actual equitable distribution of wealth among people. No, this is very different. And by that virtue, Bitcoin is that pristine collateral in a rapidly new free market economy, which is what we've always tried to aspire to, is to distribute the wealth, making it a truly supply and demand type of dynamic type of free market, where we don't have any central authority imposing fiscal monetary policy or interest rate settings in terms of how much of that wealth ought to be in the supply market. Now this brings into the next interesting point that he's raised about what he means by Bitcoin monetization, why he thinks monetization through Bitcoin has actually begun. So basically, as a result of Trump's announcement of incorporating Bitcoin as that national strategic reserve asset, and in addition to that Senator Loomis is also actively campaigning and trying to pass the Bitcoin Act bill through the Congress, it's now set the game theory rolling, not just at a national level, but also overseas, because other nation states have always been waiting that kind of leading steer from the US. But now that it's been set in motion, the game theory has begun. So we shouldn't really feel we're still new into Bitcoin and you're feeling, oh, it's a bit too late because it's almost, what, $100,000, even though it's slightly dipped in recent times. I think the message there is you're still very early because there is a lot to play for. and an awful lot to gain, as I said before, in order to preserve our wealth and to help grow it into the long term. Then Bitcoin certainly should be that digital asset that you ought to invest in, and importantly hold into the long term. And you're going to start to see that gradual pull of traditional finance assets into the Bitcoin network. And it's not just the traditional capital assets that we're mostly familiar with, things like real estate, arts and collectible, and even gold. Bitcoin is set its journey to demonetize all of those traditional finance assets and will become fully monetized into the Bitcoin network, where Bitcoin will be fully integrated with the legacy financial system, but on its own terms, which is rather unique and rather different from what we're used to under traditional finance arena. This brings over to my last point that he raised, very interesting, around banks and Bitcoin, where how Bitcoin will play a role in that. The explanation he gave makes sense. It's not really the problem with banks, because Bitcoin is fully decentralized, and no matter who owns it, even at an institutional level, there's no way on earth that can actually tamper and manipulate it. That's another beautiful attribute that Bitcoin provides to us humans, which is the first in history of its kind. No, the problem there is the notion of fractional reserve banking. What does this mean? It means where banks typically, out of a fractional amount of capital or collateral that's been held in, let's say, in bank deposits, they're always get into the habit of multiplying the credit into the market. That is managed what we call through fractional reserve banking. That is the problem, according to CJ Konstantinos, and I actually agree with him, because if you incorporate Bitcoin into the credit system through collateralized lending, what you're trying to do is clean up the credit system such that it won't be too big to fail. So if there is the next financial crisis around the corner, similar to the one that we've encountered and endured during the 2008 GFC, by incorporating Bitcoin into the credit system, you're going to be able to avert that financial crisis. I think this, again, will be a tremendous opportunity if Bitcoin can achieve that integration into the overarching credit system run by banks. That is all I'd like to discuss today. So if you enjoyed today's episode, please don't forget to hit the like button, to share the video with colleagues and friends, and if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.